Trade relations between the European Union and United States have deteriorated over recent weeks, with both sides threatening to impose tit-for-tat tariffs. Amid fears over a potential trade war, the bloc is stepping up efforts to bolster ties with other economic partners. William Denslow has more in the second of the two-part series on the future of EU-US ties.
30% of global trade is conducted between the EU and US. It's the largest bilateral trading relationship in the world. But in recent months, the EU has been on a charm offensive, seeking new suitors to do business with. The European Commission President hinting that the current spat with the US is more than a temporary lover's tiff.
Forging these partnerships is essential, because we have learned the very hard way that sourcing products we need from partners we trust is the best way to avoid overdependencies or to avoid vulnerabilities and blackmail.
After years of negotiations, in December the EU signed a controversial trade deal with 4 Mercosur countries: Argentina, Brazil, Paraguay and Uruguay. In February, it advanced talks with India in an effort to secure a free trade agreement by year's end. And this month, the bloc agreed to a $5 billion investment deal with South Africa and a digital trade agreement with South Korea. The deals open up access to 2 billion potential customers. But experts warn that trade deals agreed today could take over a decade to truly start bearing fruit. Meanwhile, the American Chamber of Commerce to the EU estimates a trade conflict with the US could cost businesses $9.5 trillion a year. The EU's responded to Washington's 25% duty on steel and aluminium with the threat of countermeasures worth $28 billion. This includes a tariff of 50% on American whiskey. That has prompted Donald Trump's dizzying threat of a 200% tariff on European alcohol, a move some in the industry describe as a potential hammer blow. Industry experts say it would take the equivalent of 20 Mercosur deals to offset the impact of US duties on European spirits alone.
It's very clear that this diversification is not about replacing established good markets such as the US or China with other markets. It's about trying to get even more diversity, more options for companies, but this is something that is not going to help in the short or mid-term.
President Trump claims the EU is ripping off America. It's a charge Brussels denies, arguing the imbalance in the trade of goods is largely offset by the US surplus when it comes to services. Analysts say there's enough at stake for both sides to seek common ground.
Whatever happens in the area of economics and trade is something that is negotiable. And in that sense, whatever threat we see on the table may not even be the final objective. It's just a means to the end to basically cut the trade deficit.
The European Commission warns that tariffs lead to lose-lose outcomes and calls on Washington to change course to prevent ties from souring further. William Denslow, CNA, Brussels.